The space that I want to discuss today is all about Bitcoin. You're knowledgeable, not just as someone who just buys it, there's plenty of those folks,
Yep.
but you're also involved in the mining
Correct.
side of things. Is it a scam? Even my family think I'm crazy because I'm dipping my toes in the water here.
It's certainly not a scam, and it's definitely an asset. The government labels it a commodity. Bitcoin is censure resistant, decentralized, rules-based, hard money.
It's going to 10x in 5 years. And so if you really believe that, why am I going to pay my mortgage off early instead of just buying a couple Bitcoin? Hello and welcome everyone to All Roads Lead to Real Estate. My name is Matt Ryan. I'm your host, and I am here on a slightly different, a divergent, if you will, a tangent, adjacent concept here to real estate, but something my investor friends certainly will appreciate, and something I feel, and I'll get into this in a moment with my guest here, Neil, but I feel kind of like some FOMO going on, and I think this is pretty common for a lot of folks that probably have not invested in the space that we're about to discuss. But the space that I want to discuss today is all about Bitcoin and cryptocurrency. Now, don't turn this off immediately for those that think that's crazy. That's, what in the world, I think there's so much talk about it from people that might not understand it, including, honestly, half myself. I am no expert yet. However, I'm fascinated by it, and I know it is here to stay, and we're going to discuss why it's going to be here to stay. And I think there's certainly enough conversation on the internet around Bitcoin, but I think they're typically from these talking heads, not necessarily from someone with my perspective. I'm a real estate investor. I'm someone who has quite a few assets. I have a lot of stock, a big stock portfolio. I have a big real estate portfolio, relatively speaking, and I want to know this space. So I think it's best, in my opinion, to be interviewed. Well, you are really a subject matter expert, and I'll discuss your bio in a minute, Neil, but this is really what this is designed for, to give you an idea at home. What is this? Do you also suffer from FOMO? Are you wondering what in the world, is it too late? Because, Bitcoin has just exploded lately. And what is it? Is it a scam? Even my family think I'm crazy because I'm dipping my toes in the water here. And so I want to get right to it and introduce Neil Roseman. He is really an associate of mine that I've known adjacently for years. And so he has graced me with his presence, and he's a serial entrepreneur. He is someone who's wildly successful in a variety of arenas, but the one I want to speak to you today about is really because you're into Bitcoin specifically, you're passionate about it, you're knowledgeable, not just as someone who just buys it, there's plenty of those folks,
Yep.
but you're also involved in the mining
Correct.
side of things. So if you don't even know what that means, buckle up, you're going to get an education here. So first off, Neil, thank you for joining me.
Oh, thanks for having me. This is great.
And yes, well, thanks for joining us. And so this is a new setup for us. We have a desk. It's looking so official.
It's incredible.
Yes. So it's looking great. And I need to turn you up, actually. All this new technology. Let me make sure I can actually hear you. All right. I think I can hear you now. All right. So Neil, help everybody understand a little bit about your experience. Why should they, take for, what you have to say here seriously?
Well, I don't know why they should take it seriously, but, it started for me. I guess it started back. I think everybody has a story where they were exposed to Bitcoin at some earlier time.
Sure.
And blew it off, right? Sure. So in 2017-ish, it started getting really popular on CNBC. You'd see the little bug, and I saw it go up to 18,000, and it was all about gambling and just about number go up, sure. Right? And I said, well, I'll buy it when it goes back down. Of course, it went back down to like under 3,000, and I never bought it.
Yeah.
So that was my first exposure to it, and then in probably late 2021 or early 2022, I listened to a podcast called Radical Personal Finance, and Joshua Sheets, and he had one of the episodes was called "Why I Was Wrong About Bitcoin." And anytime somebody's gonna tell you why they were wrong in a public fashion, I listen maybe even more intently, and sure. Everything he said made sense. And that's when I started doing my own due diligence. So to understand Bitcoin beyond just a speculation or some kind of gambling or even just an investment, you've got to put some work in. You have to listen to podcasts like this. There's lots of other better podcasts for Bitcoin, out there. You've got to put some work in, probably about 200 hours to really start to, it doesn't mean you have to study like a book study, but, be on Twitter, listen to podcasts, read blogs, and start to understand why Bitcoin is fundamentally different. And it's not just about making money.
Well, so I want to start you because I truly am in my understanding phase. So I've first heard about blockchain and I understood enough of it to say I have no idea what it like. Sometimes when you start, there are certain, even real estate, I could teach someone the fundamentals of real estate in a pretty. I don't need 200 hours to teach them real estate. I really don't.
Right.
And you also have a lot of experience in real estate, so that's a whole part of your world. So it's not like you're not aware of the other side of what other people can place their money, but specifically, it's like, what is Bitcoin? I want to start there because is it a scam? Is it an asset? Explain folks what it is and why is it here?
It's certainly not a scam, and it's definitely an asset. The government labels it a commodity. Okay. And what makes Bitcoin special for the new people that are listening? Probably the number one thing I could say is that there's a cap on the total number of Bitcoin that will ever be produced. And that cap is 21 million. So a lot of people refer to Bitcoin as like the hardest asset out there because you can't go above 21 million ever. Right. But yet, if you any kind of fiat currency, and when we say fiat, we're talking paper currency, whether it be the dollar, the euro, the yen, the ruble, the yuan, all that is just there's more and more getting produced. Right. So every year we just print more money.
Sure.
And so what happens if you kind of look at one of the reasons why you have to spend so much time to understand Bitcoin is you have to kind of understand money first. And we in America live in a country with, obviously we do really well, and we are also the reserve currency of the world. So we have that kind of strategic advantage, right? But if you look, but I can guarantee you the US dollar, I'm going to guarantee it to you, is going to zero. Wow. And so is every other currency, paper currency.
Now, is that going to happen in 3 years, or
no.
What's your prediction on that?
I don't know. Might not. It probably won't happen in my lifetime.
Okay.
But if you look back in 1950, here's how I'd prove it to you. If you look back in 1950, a Big Mac was 5 cents, and now it's $5 or more.
Sure.
So in those 70 years, the dollar lost 99% of its value.
Right. Well, let's go back because and I'm going to try to keep this honest here in terms of, because I've done hours of research now online, on YouTube. Mm-hmm. I've listened to the experts like yourself. You own tens of millions. I don't want to put your stuff out on blast, but you own tens of millions of dollars of Bitcoin. Like you own mining facilities. You are a subject matter expert. And some folks that are so deep down that rabbit hole that have this knowledge have a tendency to speak in terms because you're so knowledgeable that you go right past the basics. I want to stop and go right back to the original question. Yep. What is Bitcoin? So
Bitcoin it was designed by Satoshi Nakamoto, which is a pseudonym. Nobody knows who this person is. Yep. It was designed to be peer-to-peer money. That's fundamentally what it was designed. It kind of came out of the ashes of the financial crisis. And there was such a...
And when was this?
Like 08, 09.
Okay.
So I think Bitcoin started in about late 09 or 10. Okay. And prior to, if I want to give you money, the only way I can give you money realistically without a third party is I either give you cash or I give you Bitcoin. See, every other, whether it be a credit card, a check,
gold,
I could give you gold, but how do I give you $300 worth of gold? So you can't. I can't shave it off, right?
Sure.
I mean, theoretically you can, but it's not realistic, right? So you could do that, but any other money, like I said, Venmo, Cash App, credit cards, a check, a wire, has to go through a third party, and so you have counterparty risk. Okay, so you have the risk. And a lot of people don't take this for granted, but if you have your money in a bank, the bank owes you that money. They don't have that money. As we all know, is if there's a run on the bank, then they have to go to the government. Well, if there's a run on the financial system, the government is, yes, they're going to insure you for your $250,000 and probably more, but they're going to just think how much money they're going to have to print to do that.
Sure.
Okay, so Bitcoin is the only money. We call it sovereign money. I'm not going to say it's the only money, but you can hold it yourself. and I can send it to you, and it doesn't have to go through a third party.
Got it.
Okay. And these 21 million Bitcoin live on the blockchain. So even when I say it's my money, like I have it, I really don't.
And the blockchain is what exactly?
So the blockchain is like a ledger for Bitcoin. It's one ledger for all of Bitcoin. And that's transformational in of itself. You've heard a lot of people say, I don't believe in Bitcoin, but I believe in the blockchain. So you have a ledger at your bank. I have a ledger at my bank. If you write me a check, it debits your bank and it credits my ledger, right?
Mm-hmm.
Like that. Everything in Bitcoin is on one giant blockchain that's public. So your blockchain is private, right? You know it, the bank knows it, and that's about it, right? But in Bitcoin, all the transactions are public. If I send you a Bitcoin, they won't know who you are and they won't know who I am, but they can see that Bitcoin moving from my wallet, from a wallet, they don't know who it is, to another wallet.
Correct.
And anybody can see that. And you can see every transaction since the beginning of Bitcoin back in late 2009.
Is that why today the big players, when they buy big hunks of Bitcoin these days, everyone knows that someone just bought $1 billion worth of Bitcoin yesterday or whatever?
That's one of the ways they know, yes.
It's public.
It's public. Well, I mean, you can't really tell. Like you just say somebody moved $1 billion worth of Bitcoin.
Right.
Now you don't know who that person is unless they make it public. Or sometimes you can guess and you can, triangulate.
Like some of the big players.
Exactly.
Interesting. And the scale of Bitcoin. So let me get back into, before I get to the scale of it currently, it started off more almost as an idea. It wasn't the first pizza with the first transactional, tell me the story about the pizza, the most expensive pizza ever sold.
So it was it's been labeled as the first transaction that anybody knows about. A guy paid for 2 Papa John's pizzas for $33, and that was about 10,000 Bitcoin.
And today Bitcoin's worth?
That would be worth 1.1 billion, 1.2 billion today.
And that's certainly an expensive Papa John pizza. Wow.
Yes, it is.
That's crazy. So, and fundamentally, is it more secure than money because it's on this blockchain rather than a specific currency, or what's the advantages additionally other than transparency for blockchain?
Yeah, I don't know if it's secure because it's on the blockchain, because if you have there's an old saying in Bitcoin, not your keys, not your coins. Okay, if you keep your Bitcoin at an exchange like Coinbase or Kraken or some of the other ones, you're giving them your keys.
Got it.
Okay, if they go under, your Bitcoin could be lost. That's what happened with FTX and all those other ones that went under, 3 years ago, right? So if you keep it in cold storage, which means I have the keys, then it's safe because there's no counterparty risk. I control 100% of my Bitcoin. I don't have to worry about a bank giving it to me. I don't have to worry about a brokerage company saying yes, or trying to make a wire and it gets held up. Right. Everything goes through.
I can tell you, when I first started learning about Bitcoin, I'd have to write down, and Raul's here in the studio. If he's not aware of these things, you're hearing these terms, cold storage. It's a lot we're throwing at you. If you're not super familiar with it, it can be extremely confusing. I think it's very intimidating for most people. Mm-hmm. And I think that's where people shut down. Mm-hmm. When it's just like, what is all this stuff you're speaking about? I'm just going to go about my day job. Like this, it sounds complex. And I think with real estate, one of the advantages I have when I sell real estate, it's very simplistic. You have a house, you need to live somewhere, right? And so I can help you get a mortgage. It's much more, we're all used to it since we're children. And so what my concern is now, I'm in my 40s now. I'm sitting here looking at my asset classes, and I'm concerned. For example, I have an operating account in the business. I have too much money in the operating account, which is a bad thing from an investment standpoint. You don't want too much cash on hand that's just in US dollar, right? So, one of the concerns, one of the things I want to talk about later is, what do you do? Do you transition that over to Bitcoin and create your own, what do they call that? What if you keep a ledger for your company and you have it in Bitcoin for everything beyond, let's say, 6 months of reserves for the business? Is that considered the new norm, and what a lot of these larger corporations are going to start adopting?
It's certainly starting to take on those Bitcoin. There's kind of 2 types of Bitcoin treasury companies.
That's the term I was thinking of. Yes, Bitcoin treasury.
Right. They're the ones that go out and buy Bitcoin. Their sole reason to exist is Bitcoin. But there's other companies that have a business and they keep some of their cash in Bitcoin. Right. Now, it could be just a very small amount, could be, whatever. So that's starting to pick up a little bit. I think we'll start to see that accelerate. I don't know how many more in America just Bitcoin only companies, but you can see if a company makes money, right, profit, and most companies seem forced to do something with that money, either buy back shares,
Sure.
declare dividends, or reinvest it in the company. Well, if you don't have any good options for that, then Bitcoin becomes a really great option to enhance your the net worth of the business while it sits around.
And I encourage everyone, if you're new to this, look at someone like Michael Saylor. I'm sorry, until I'm still new at it. Michael Saylor, because I think he's such an advocate. He almost sounds like a nut job, quite frankly, and he might be. But tell everyone, because obviously you would know him better than I, a little bit about him and what his fundamental beliefs are.
Well, he was running a company that was, I don't remember. He said he was making money every year. He's in the technology space. He couldn't compete with Microsoft, couldn't compete with all the other companies, but he was making money, and almost like a zombie company. And he had $500 million of cash on hand in 2020. And finally, he was so fed up with being on the hamster wheel of 20 years trying to grow his company and failing and failing and failing. And at that point, I don't know what the number is, but let's just say he was a $500 billion company. And now he's a, $80-90 billion company.
Sure.
It's, just by buying Bitcoin, now he's...
And that's MicroStrategy, if you want to look it up on the ticker.
Right, now it's called Strategy. They've changed the name.
Changed it.
Yeah, but everybody kind of refers to it as MicroStrategy.
Got it. I think that was the original company name, MicroStrategy.
Correct.
Because it was like a Microsoft, one of those type of companies.
Yep. So he's been this incredible proponent of Bitcoin and how pristine the money is. Bitcoin is like perfect money.
Right.
With a 21 million cap, and how you can send the money to anybody in the world within 10 minutes.
Right.
That's unbelievable. Try sending an international wire.
Yeah.
And see how long that takes to go through. Try going to your bank and pulling out $50,000 in cash and see how that goes. A, they won't give it to you.
Sure.
B, if they do give it to you, you'll have to wait till the truck comes in with the cash. And C, they're going to ask you a bunch of questions about what you're going to use the money for. Right. And then you're going to have to fill out forms because it's over $10,000. You start to really get that your money is not really yours.
Yeah, it's fascinating. So I think because over the last year, it's been a learning curve. So one of the reasons I wanted to have you in is because if you're super knowledgeable about Bitcoin, you sound almost like a nut job. I'm a big proponent of a company called Tesla. Ignore the political statement that is, but I'm just referring to the company itself, the technology. And I have done so much research in that company that if anyone were to ask me on the street about the company, I sound like a nut job because I'm so well researched. And if for those that are well researched, on average, they're going to be very big. They're going to be very big bulls on Tesla on average. And so the folks that I see that I think are very well researched in Bitcoin sound equally nutty because they seem like if you don't understand it, you're going to be behind. And I think we're at an inflection point. One of the reasons I want to get more knowledgeable about it, I believe firmly that we're at a 2% adoption rate so far. 2% of the population has any Bitcoin exposure? Is that about right?
Yeah, about right.
So, and there's only 21 million. And so how many millionaires are there in the world?
There's 60 million millionaires.
Yeah.
And there's 21 million Bitcoin.
So even to have one full Bitcoin that's now currently valued, fluctuates daily, but maybe 114, 115,000, somewhere in that ballpark currently, it's been so volatile that most people are terrified to put it in because it seems speculative. And so it just seems wacky. And I talk to so many financial advisors that I represent in real estate, and I talk to them about Bitcoin, and they don't agree with it. I have a couple clients that manage hundreds and hundreds and hundreds of millions of dollars of other people's money, and they won't touch it because they think it's speculative and they have no place for that, Matt. And they have zero. They don't want to have any exposure.
Yep.
And I ask them more questions about what is it, what about it. They can't answer me. I don't know anyone that is in that space that's super knowledgeable that calls themselves a financial advisor. I haven't met one yet.
They're hard to find, for sure. There's definitely, like my financial advisor will buy up to 3% of your portfolio in Bitcoin if you ask them to. Okay.
Can they get paid on that?
Yeah.
Okay.
Yeah. So they buy it through the ETF.
Okay.
So a year and a half ago.
Exchange traded fund, guys.
Correct.
Yep.
Almost like a mutual fund, right?
Right.
So they buy it. So that was the part of the problem before the ETFs came out, is that the financial advisors didn't have any way to hold Bitcoin.
Right.
You need a whole, I can't even tell you how difficult it is to be managing other people's coins. And see, when you hold your own Bitcoin, I referred to it earlier as sovereign money. But with sovereign money comes sovereign security, meaning there's no 800 number to call.
Yeah.
Right?
You lose it, you lose it.
You lose it, you lose it. Now you shouldn't lose it. There's lots of ways to prevent you losing it. And I know everybody's heard the stories of so many people that have lost their Bitcoin, but it's not a but. And what there is to realize is they lost $500 of Bitcoin because they didn't follow because who follows very in tight security when it's $500? The problem is that $500 turned into $500,000 or $5 million.
Sure.
And now they lost it. So it's not that they lost $5 million. They lost 500 because it was on an old hard drive.
So you're saying at today's prices, if I put $1 million in, I'm going to take extra precaution. I'm going to know exactly how to take care of it and access it and keep it secure.
How many times you get a gift card and you lose it?
Right. Because it's $25 and you're like, it was in my wallet. I could have sworn.
Yeah, but if that gift card was $1 million, you would take care of it.
Yes.
You would. Right. So I think that was the issue, that Bitcoin has gone up, from basically 1 cent to, the high last week was 124,000.
Right.
So it's whatever that is, that's, hundreds of thousands of % return, which is just incredible. So,
and what sounds so nutty when I was talking about the folks that are crazy about Tesla, and now many of the folks that are I consider like the raging bulls for Bitcoin, you hear these estimates that sound that it can't be true. You hear people say, within the next 5 years, it'll be at least $1 million of Bitcoin or more. And you hear these things, you're like, oh my God. So it's going to 10X in 5 years. Mm-hmm. And so if you really believe that, why am I going to pay my mortgage off early instead of just buying a couple Bitcoin?
Exactly.
Or like you start looking at these, but then it's like, well, there's no guarantees in any of this. And couldn't it go to zero?
Yeah, look, when I started buying in 2022, there was a risk it could go to zero. The government, for lots of reasons, the government didn't like it. Now, Bitcoin won't go to zero because the government bans it. China banned it, and it didn't go to zero. Okay, the U.S. government bans.
So if I was a citizen in China, there's no way I can buy Bitcoin directly?
You couldn't buy it, hold it, or mine it back. Now, I'm not sure what the current rules are. I've heard they loosened up a little bit. But see, remember, Bitcoin, China wants to control everything you do. And they've got these phones, if you don't pay your bills, there are certain hotels you can't stay in. It's like your phone, they won't check you in on your phone. Even if you're going to pay for it. So
it's a true surveillance state.
Yeah. Right. So they've got what they call a CBDC, which is a central bank digital currency, and they can control everything. If they want to cut off all, if America wanted to cut off all gun stores from selling guns, and we had a central bank digital currency, with one push of a button, nobody could buy a gun.
Right.
That's the danger of that system.
Well, you definitely, as a country, if you're in the government, if you're in power, if you're currently in power, this is a threat. I can't imagine how it's not a threat.
They're too confident, or they're too confident to actually see it as a threat yet. I mean, when you listen, a lot of them are older people that don't understand it. They're all in their 60s and 70s. That are people in the higher levels of government. We have people from the Trump administration that are very pro Bitcoin. Most of his cabinet owns Bitcoin.
Right.
Okay, so that's like a win. In Biden's administration, it was really anti-Bitcoin. So going back to what I was saying in 2022, is like, it was lots of ways it could go to zero, and I had like a list of like 8 of them, type of thing. Now I feel like there's almost zero chance of it going to zero.
And I've heard the expression, and maybe you can elaborate, if it doesn't go to zero, it's going to the moon.
Yeah. So one way to look at it, Matt, is if price is a function of supply and demand, okay, and you have fixed supply of Bitcoin, it makes it so easy. Then price is just a function of demand. So as long as adoption keeps going up, the price has to go up.
Well, tell me what fundamentally is unique about Bitcoin, because from my understanding, Bitcoin was created by an individual that we don't know. That's part of the blessing of this, because of the almost the nature of how it was originated is one of the blessings of Bitcoin, correct?
Yes. And not only that, he mined the first, he was like the only miner, right? So he mined today $10 billion worth of Bitcoin and has never touched it. It's just been sitting there on the blockchain. Everybody knows which blocks are his.
Right.
So he invented it, walked away, and never spent a nickel that we know of.
And is it true that if one day all those blocks that have been sitting there magically start moving or selling or transacting, that it's going to fundamentally shake the market?
It would shake the market for sure. I mean, I don't know, 30%. I mean, I'm not saying it's going to zero. Right. It either means he decided to move him, or he was hacked, or he died. Maybe maybe an heir got them and doesn't want to maintain. Who knows, right?
Right. So now, what is keeping the next quote unquote Bitcoin from happening and replacing Bitcoin? What is protecting it? If I decided to invest a portion of my net worth into this, it's not an asset. You corrected me earlier. It's a commodity. And we should explain the difference for folks.
Well, that's more of a governmental.
It's important, though.
Yeah, like in terms of taxation and whatnot, that it doesn't really affect anything. It just means it's not a security,
right?
So because there's no. One thing people don't get about Bitcoin is there's no president of Bitcoin. There's no Bitcoin the company. There's no Bitcoin the foundation. It just lives on tens of thousands, if not millions, of computers around the world, almost like a virus. You can't shut it down. You can make it illegal in a country,
right,
but it doesn't shut it down.
Right.
It just keeps going.
All right, so I want to step back. Well, there's a couple ways I got to take it. But first, you had mentioned earlier about how you kind of protect yourself. So you talked about self-storage and cold storage, right? Mm-hmm. So if I have this is true. So I have, I use an app called Coinbase, mm-hmm, and it's publicly traded. It's big. It's mm-hmm, US based. It's one of the ways to access and purchase Bitcoin for us folks.
Correct.
So I bought it, and now it's just sitting there.
Correct.
And I think you've advised me privately that I should consider getting it off of Coinbase, correct?
Correct.
And so what do you do? What's the risk inherent with keeping it there, and what could people consider doing?
So the risk inherent is that you don't own the keys to the Bitcoin that's on Coinbase. If Coinbase goes bankrupt, you're actually an unsecured creditor. They say that in there, you sign the when you sign the dotted line.
You click the button. That's
all this stuff you didn't read.
Yeah.
It says that, right? So it's unlike Fidelity, Schwab, Vanguard, where if they go under, your stocks are still okay because they're custodying in a different way. Coinbase isn't. You're trusting them that they're going to maintain and hold, your keys correctly. So you have two risks. One is you have the risk of the exchange going under, a third party risk, right? The other risk you have is the government. The government could come in and take the Bitcoin. They could freeze your account personally, or they could take all the Bitcoin. Now you might say, Neil, God, you sound really weird saying that, like one of those prepper guys. Yeah. But they did that back in 1939 with gold. It was illegal they made it illegal to own gold, and the government bought the gold from you they bought it from you but you had to give up your gold if you're going to follow the law. So there is precedent that could happen at some point in time.
It does. It kind of, you wander into, if my wife was here, she'd roll her eyes because it sounds like we're wandering into the prepper space, right? Yeah. It's the, conspiracies, and it sounds like, oh, that'll never happen, right? So, but I think people that don't roll their eyes.
Can I give you an example of where I thought it almost happened?
Sure.
Yeah. So remember when Silicon Valley Bank went under about almost a year and a half ago? Okay. When we had that little mini banking crisis about a year and a half ago, Silicon Valley Bank went under, and there was billions and billions of dollars in this bank, and several companies had billions of dollars, and they're only insured up to $250,000
per account. Right?
Per account. And the difference nowadays versus in the past is you have to get into a line at a bank to take your money out. We can now move billions of dollars of money with our phones. So I was very clear after that bank went under, and there was also Silvergate that the Fed shut down, and then there was that bank in New York. It was really clear to me that the entire financial system was going to collapse on Monday. Why? Because everybody with more than $250,000 would have pulled their money out to protect, because it was only insured up to $250,000, right? If the government didn't come out and say we're going to insure all the deposits, I'm confident that would have happened. Okay. Now, Janet Yellen at 5:00 on Sunday did come out and say that they would insure all the deposits. Big sigh of relief. But knowing that I had Bitcoin in cold storage means that I didn't have to worry about that. I could still pay my employees in Bitcoin.
And there's no banking hours for Bitcoin.
There's no 24 hours a day.
Yeah. Exactly.
So there are. I think there's lots of reasons to own Bitcoin. And I think when people when you start with the perfection of the money, being that it's 21 million, it's fixed. And people are so disempowered by the government just printing money. We're $36 trillion in debt. We just keep spending money we don't have. And in Bitcoin, you can't do that.
But the value inherent in Bitcoin is the value in which you and I agree we place upon it.
Correct.
There's nothing inherently valuable about this space in the blockchain that we call Bitcoin.
Correct.
So what stops it from us just saying,
So your question back then, a few minutes ago that we forgot, right,
sure.
was why can't there be another Bitcoin that comes and takes its place?
Correct.
Right?
It's a real question.
Yeah, it's a great question. What secures Bitcoin is energy. Okay? So the Bitcoin network uses about 0.45% of the entire world's electricity.
Say that one more time?
Yeah. The Bitcoin network uses 0.45%.
The mining operations,
0.5%.
which mining simply is the computer algorithms. They're digging through the code to find a Bitcoin. Is that basically what that is?
That's a piece of it. But the other piece of it is to make sure you can't double spend your Bitcoin. Okay.
So if I transfer 10,000 to you, you're saying that it's duplicated over all these computers.
Yeah, it starts like a virus. It starts to spread within that once the first transaction, once the block is mined that includes the transaction where you send me $10,000, then it spreads to all 30, 40, 50, 80,000 nodes. Okay? So it's kind of hard to explain, but fundamentally, Bitcoin is hard money, not because it's hard. I mean, it's virtual. It's not even hard, right? But gold's hard money. But gold isn't hard money because it's hard. It's hard. They call gold hard money.
Finite amount of it.
Well, it's not so much that it's finite, because it's more that it takes work to get it.
Okay.
You have to dig a mine. You have to buy equipment. You have to hire people. You have to send them a mile down into the earth, and they have to make. I mean, think about what it takes to mine gold, right? So it takes work. It doesn't take work to print money. It's just a printing machine. It's like a copier.
Well, nowadays, they don't print it, do they? It's digital.
Yeah, and then they just credit the banks more money so they can lend more money out, right? So Bitcoin is secured by energy. So one of the ways that Bitcoin could have been attacked and gone to zero is if somebody got control of 51% of all the miners. And that's called a 51% attack. And they could have then changed the code. They could have done a lot of nasty things and made Bitcoin go to zero. Okay. Today, that's basically impossible, because in order to do that, you'd have to come up with 0.3% of the world's energy, and that doesn't exist. Even if you wanted to, you couldn't. And if you wanted to, you couldn't buy the transformers. And if you wanted to, you couldn't buy the miners to do it.
You couldn't. The United States government, if they said tomorrow, I want to make this happen, I'm going to do anything unnecessary. You're saying that's impossible even for...
The only way that the U.S. government could possibly do that would be to take control over all the mining in the United States. So in the United States, there's about 30% of the mining. So they couldn't create new mining. There's not enough electricity for that. Okay? And there's not enough transformers. There's not enough actual computers to do that. They could maybe take control of, confiscate all of our stuff.
Yeah.
That would be one way that could happen, but that would be, that would be very difficult. And that would only be 30%. That would not be 51%.
Which is what you would need to change the algorithm and change. So getting back to the question, why isn't there another? So why can't you and I create something called a Mac coin?
Yeah.
And then I think that's what everyone should invest in.
Because if we create a Mac coin and we set up just like Bitcoin, and you're mining Mac coin in your garage, then I can buy 50 miners and buy Mac coin and erase your transactions. Because I own the network, because I have 90% of the network, so I can do a lot of weird different things to the network. So I'm not like this technological expert to explain this to you, because I have a hard time getting it myself, but it's secured by the energy. Okay, it takes energy to mine, and the mining is not only do you mine new Bitcoin, the miners are what facilitate the transfer of Bitcoin around the system. So if you send Bitcoin from yourself to me, that a miner, whoever mines that block, includes that transaction in their block. You pay a small fee for that, and then boom, it's moved on the blockchain. And then once it's moved, everybody else, it propagates, and then everybody else, all the other nodes and miners agree with it. Now, if somebody owned 51%, they might not agree with that then, and they would actually, so see, there is no president of Bitcoin. So there's nobody the rules are consensus driven.
Sure.
So consensus starts to break down if you have 51%, right? But 51% also allows you to make changes to Bitcoin, which have been done many times over the years to make it better.
Right. So is it impossible for another, because one of the statistics I recently heard is now Bitcoin, in terms of an asset, like net value of this asset class, is it the fifth most valuable asset in the entire world?
Yes.
That's what I heard.
Yes. So if you look at like the value of like the stock, like it's like sixth company, there's eighth, or somewhere right around there.
Right.
I mean, I think there's things like oil is higher, gold is higher.
But there's very few things. I think it's almost so large. I think it's almost, in my mind, in the layperson's mind, it's so large. That is in essence almost protecting it.
Yes, that's the point. That was not the case in 2022. There was still a risk that China could make like this unbelievable push to own all the Bitcoin and to own all the miners, right?
Right.
But even China can't do that today.
Right.
It's too big. It's a $2.3 trillion asset, but it's not the money that's the issue, because, the government could print $2.3 trillion. You don't control Bitcoin by owning Bitcoin. You control Bitcoin by owning miners. And miners use tremendous amounts of power. I mean, power that you can't even comprehend. 0.5% of the entire world's electricity goes to Bitcoin.
So can you discuss some of your mining operation,
Sure.
why you even got started? So instead of like me, I'm just going to go to one of these exchanges and I'm going to buy. My goal is to have a couple Bitcoin soon. Like that's my goal.
Right.
So, but that didn't satisfy you. Your goal was did you start there? Did you start with just investing in Bitcoin?
Mining is a very difficult way to buy Bitcoin. Okay. Yes, you can get Bitcoin maybe cheaper than buying it, but it's tremendous capital investment. I mean, you're buying generators and electricity. But one of the reasons I got into mining was because it supports the Bitcoin network. See, being a miner makes Bitcoin stronger. And one of the problems, one of the things we haven't talked about yet is that Bitcoin is decentralized money, right? We said like it's like a virus. It just lives wherever, right? While fiat is centralized money. You got the president, you got the Federal Reserve, chairman, Federal Reserve. They decide the price of money. So there's a concern that a lot of the big miners, all the public mining companies, have too much mining power. They're kind of approaching 30%. Well, if they get to 51%, that's a potential attack point for Bitcoin. So by me mining, not only can I get maybe Bitcoin at a cheaper, than the current price, I'm also supporting the network in a decentralized manner.
Got it. And how many miners do you think exist out there?
About 8 million computers.
8 million computers. How many different entities? You're an entity. You own.
Yeah, you can't. It's almost impossible to tell. Right. You can get a sense of how many computers are out there by knowing what a number of calculations. You can how many calculations are being done.
Sure.
So you can kind of work backwards into a number. But the number I'm hearing is about 8 million now.
Well, what's fascinating to me, at least, one of the reasons I did not invest in Bitcoin early, and I think a lot of people that consider themselves an investor have a story if they haven't gotten any exposure to Bitcoin. I bought my first Tesla. This was probably 2017. I go in there to the Tesla dealership, and the guy next to me did I tell you? I might have told you this story on the phone. Yeah. He, in his wrist right here, he had, on each knuckle, he had a little protruding piece underneath his skin. And it just looked a little odd. He was odd in general. Good man, odd. And we're talking and carrying on, and he wanted to buy his new Tesla. His version was much nicer than mine, but it was a very expensive brand new version. He goes to buy it, and now granted, maybe it wasn't 2017, maybe it was like a couple years later. Maybe I was getting serviced. He was buying a new one because it was the Model S Plaid when it first came out. So I think maybe that's 2020 or something. The whole point of it is he decided to buy it. They were accepting Bitcoin as payment at the time because Tesla has a big position in Bitcoin.
Yep.
And he bought it by tapping his fist on whatever it was, whatever device they had. And he bought it in exchange. He goes, that's his cold storage, he said. He had it on his person. And he was a miner, and he lives in Carroll County. I'm not going to give any of his information, but he has an underground system he told me about. He mines it underground in a cooling solution to keep them chilled.
Yep.
And he had a huge farm, and he has a huge industry. And he was trying to tell me, he found out that my family had a farm. He said, this is what you have to do. I could tell you exactly how to do it. You can mine it. We can put it underground. No one's going to see it. He has a huge solar arrays, and he's off the grid. And I'm looking at this character, and I said, there is no way whatever he's doing is legal. I don't know what he's up to. And that was my experience with Bitcoin. And I was like, that's the face of Bitcoin. Whereas my financial advisor shows up in a pinstripe suit, right? He looks charming. He drives his BMW. The disconnect between the two of these figures in my mind.
Right.
And that's what scared me.
He's like the cypherpunk, right? From the old days. And I don't know what he was doing with his hand. I have no idea.
He said they're dog tags.
Okay.
And he thought it would be cool to put them on him because he said he had so much on, and he's in his early 20s.
Right.
And he said, I have so much Bitcoin because I've been mining since it first came out. He said that I don't dare leave it at home.
Right.
And I go, interesting, but you told a stranger in 20 minutes.
Exactly. That makes no sense.
Makes
no sense.
If I knew what I was doing, I'm cutting your hands off and I'm going to. Yeah. So that's why I don't want to release too much information, but it's, yeah.
Well, let me say, let me respond to your comment about the traditional financial advisor. I've never met anybody who's put 200 hours into Bitcoin who doesn't support and own Bitcoin.
That's what I mentioned to you earlier. I feel like they don't know enough about it to go down that rabbit hole, or they don't know how they can make money on it. It's my same criticism from my financial advisor friends, why they don't know a lot about real estate oftentimes.
Right.
Because I don't think they know how to make it part of their strategy, and they can't monetize it for themselves.
Right. So up until 18 months ago, that would have been true. Now with the ETFs, they can at least own the price. You don't own Bitcoin because you've given your keys now to the ETF, to BlackRock or to Fidelity or whoever you buy them from. Okay. But at least you have the price action of Bitcoin.
So when Bitcoin goes from 100,000 to 200,000,
the ETF will double.
The ETF will double.
Minus the small, fee that the ETF charges.
And from what I understand, because this is now going to be an investable, asset or part of a lot of people's retirement plans, you're going to see adoption instead of that 2% adoption rate I mentioned earlier at a much, much higher rate, because you might not want to be 50% Bitcoin in your portfolio, but virtually it's hard to argue that everyone shouldn't have at least some exposure to this.
Yeah. So first of all, let's make sure that 2% adoption rate that you're talking about is that's 2% of the population probably owning 1% of their net worth in Bitcoin, right? So it's not even, right? It's not 2% owning 50%. It's 2% of some 0.1, 0.05, $300, whatever it is, right? So the first thing I'm going to say is that the only wrong answer to owning Bitcoin is zero. You have to do, everybody has different situations, different, whatever. Okay. They're older, they're young, they're rich, they're not rich, right. They're about to be rich, whatever. They all have different reasons. Okay. So the only wrong answer is zero. But here's another way to look at it. This was said by, I'm just forgetting his name. He runs the biggest financial advising firm in the country with $300 billion of assets. He said crypto, which is mostly Bitcoin, but crypto is 2.2% of the United States assets. So if you're not 2.2% of your net worth in Bitcoin, you are short Bitcoin. So 2.2 gives you like even, right? 5% means you're above, 10%, like that, right?
Right.
But like so that is very sobering to people when they realize that by not owning any Bitcoin's a $2.2 trillion company. Everybody owns Apple. If you have a stock account, you probably own Apple because whether you own it directly or you own it through an ETF, you own the Mag 7, all of them, right? Through your ETFs. If you don't own 2.2% of your net worth in Bitcoin, you are short Bitcoin. That means you're betting against Bitcoin.
Right. Well, and it was a female friend of mine, it's a client, and she told me that when I brought up that I was going to interview you, she said that she thinks Bitcoin is a male thing. She said it's very masculine to me. Is that an interesting comment? She said that she doesn't know any of her female friends that have learned about it and done it. Is that something that you would agree with, or is that she's totally wrong? She wanted me to ask you about that.
I don't agree with that, but I do agree that most of the people that own Bitcoin are male. I mean, when I go to the conferences, they're 75, 80% male.
Yeah.
I don't know why that is. I mean, But
I can tell you the podcast, the people listening to this, it's going to skew so dramatically. The investment, if you didn't know that, it's extremely male dominated because this is what I've heard. It's not me saying this, but it's because it's like that. It's that hunter mentality, that protection mentality that men might be born with, that it's to go, collect food and bring it home. Right. It's that desire to go capture something, right, and bring it back. And it's like inherent in me. That's why I got interested in it. And And what I challenge myself to do, and if you're listening to this, it's like, if you've made it this far through the podcast, I'm sure you're interested in Bitcoin. You go out, if you don't have any, go and get an account, learn about it, and just put in $100, put in something.
Yep.
Because you're actually going to pay attention when you have a little something in it.
Get some skin in the game.
Get some skin in the game. And by default, you're now going to be starting to pay attention to the ups and downs. You might start listening. It's like, so you're going to become more knowledgeable, which is what I really like what you said, is the only wrong number is 0. So by saying 0, it's kind of like giving up. Because if all these nut jobs, in my opinion, and I say this lovingly, that really know Bitcoin, if they're right, in which there's a percentage chance, you can't say it's 0. There's not a 0% chance they're right. If they're right, you're missing out on an opportunity that won't be replicated in our entire lifetime.
Correct.
Like, that's the part that really freaks me out. It's like, I really need to, because in 5 years, 10 years, this asset class could be worth so much money. You will never become what they call a full Bitcoiner or a whole Bitcoin.
Whole coiner, right.
You'll never get there because it could be in the millions.
Yeah, exactly. I have a target that I'm trying to get at, and it just seems harder and harder because the price keeps going up. Like I started buying when Bitcoin was at 28, and I bought it all as it fell all the way down to 15,000.
Yep.
15,000, right? And then that was right around the FTX blow up. Sure. And then it started working back, but it's like, man, what I got 15 grand, I got one coin. Yeah. Now 114,000, I get one coin.
Well, and then so someone like me, and I represent a lot of clients, and this is a real estate podcast, so I got to go here. So if I own a piece of real estate, let's say it's worth 400,000, it's a townhouse. It's a good example. I sell a lot of these. If you had that, I have it rented out, and I have equity in it. Let's say I have 200,000 in equity. It's about half paid off. The traditional sense, we pull that money out, and I can then use that money and buy my next real estate rental. Mm-hmm. That's very common, and everybody in the world knows that's a very common theme. As long as your new mortgage, when you pull the money out, is covered by your current rent rate, it's the most beautiful thing in the world, because you have no cash out of pocket, right? You didn't have any initial capital outlay. You finance that amount. Should instead people be considering taking out that 200 grand and maybe buying a Bitcoin or two?
The answer is yes. I mean, I don't want to give financial advice, obviously. And the neat thing about that is you're using the fiat system, right? So the neat thing is, if you get a mortgage for 200,000 in your scenario, right, and you borrow it today, you don't have to pay it back over 30 years. When you pay that last payment in 30 years, it's going to be worth so much less than that payment is today due to inflation, right? So if you're making $1,000 payments, let's make it simple, right? As you pay, or if you get you get an interest-only loan, you only have to pay back principal. If you have to pay that principal back in 20 years, that 200,000 is going to be so much easier to pay back in 20 years because of inflation.
Right.
Right. So the Bitcoin is a hedge against that. Now, I'll just back up and say, that might not be everybody's in a different situation, right? That might make sense for you. I don't know if it makes sense for everybody, but the point is, get off of 0.
Yeah.
However you decide to do that. There's people that do it with their credit cards. I don't know,
So what makes me nervous about any of this stuff, it's just, even if you really believe in it, to say I'm going to max out all my credit cards and I'm going to take out, if I have equity in any of my primary house, or if I have a rental, it's like being over levered, because there's no risk. It doesn't have no risk associated with this. I do believe you, based on my research. I don't feel it's going to go to 0, but it can certainly cut in half.
Oh, easily. Yes.
It's absolutely within its power. And so
it's gone down 70+% 4 times.
Yeah.
So let me say a couple things. One is Bitcoin. I think people should distinguish between volatility and risk. Okay. Bitcoin is very volatile. It's not risky, because that the inherent value of it is capped by 21 million. Right. And yes, it has lots of ups and downs. And most of the time when it goes way down is when it blows up.
Yeah.
If it goes from 100 today to 300 tomorrow, then it goes back down, right. It has that downside. So yes, it's volatile. Doesn't mean it's risky, though. I tell people one of the big things that people struggle with, and I think a lot of your listeners are going to struggle with this, is I love Bitcoin. I think it's right. I don't want to buy it at 114. Like, that's, when it hit 100, people, I can't tell you how many of my friends say, I'll buy it when it gets back down to 70. And it did. It went down to like 75 and change. Yeah. And I went to those friends and I said, did you buy Bitcoin? No.
Well, no, I was too scared. It could have gone to 0.
Or they're just like, if you're going to do that, then you better put the buy order in. now, right? But I'm a firm believer in dollar cost averaging. I bought every week for 150 weeks plus. Every week on Monday at 11 a.m., starting in spring of 2022. So
explain what dollar cost averaging is for everybody.
Yeah, it just means you put a certain amount in every week.
So instead of trying to time the market,
exactly,
you just say, I'm going to be disciplined. And people do this. Many people do this with their kids. The kids, 529
they do
college savings account or
right?
their 401k. Every paycheck, I'm going to put in 6% or whatever the amount is.
So you dollar cost average in. Right. The neat thing is if Bitcoin, like it did, it went from 30 to 15, I was putting the same amount of dollars. I'm like, wow, I got double the amount of Bitcoin.
Yeah.
Because there's an old saying in Bitcoin that one Bitcoin equals one Bitcoin.
Right.
And people are like, well, what do you mean? Well, see, the problem with saying that one Bitcoin is equal to $114,000 is you have to deal with the denominator of the 114,000. If you keep printing more money, that number is going to keep going up. Because you debase the fiat.
Well, that's one of the reasons why everyone, for the longest time, say buy a real asset like real estate.
Yep.
Because yes, $300,000 townhouse today, it's still that same townhouse in 20 years, but it's not 300,000 just because 300,000 can't buy any, the same amounts. Because of if inflation averages around 3%, I don't think it's going back to 2% annually anytime soon, even though that's the Fed's target. In 10 years, that's 30%.
Yep.
Just that.
Yep.
Even if the neighborhood didn't improve.
And your rents went up the same amount, the 3% a year.
But you borrowed at a fixed rate.
It's the perfect scheme. I don't know how else to say it. Like it's beautiful to buy.
But it's accessible. That's what I get excited about it. Because when I was, a poor college kid learning about real estate, I got so excited. It's why I went into real estate originally. Right. It wasn't to sell real estate. It was to invest in it because I understood that concept. And that just blew my mind that I could borrow someone else's money at a fixed low rate and buy an appreciating asset that had, to your point, it could go up and down. But I always say hold real estate at least 10 years in a decent area when you buy. Like, it's really not that risky.
Correct.
And I feel like that's kind of what I'm being persuaded here is to consider Bitcoin in the same category where it could be halved. It could, but hold it long enough. And I think you're going to look really smart.
Yes. I mean, Bitcoin has never been negative over a 4-year cycle.
Yeah.
So any four
Same
year
is true of real estate over 7.
Okay, great.
In the last 100 years. So that's really fascinating. And the other piece of this is that there's these banks that are starting to establish themselves to allow you to, if I owned a substantial Bitcoin amount, right? If I had several Bitcoin or, well, in the future, even one Bitcoin would be maybe enough. You can borrow against it, similar to that, you could, without selling the underlying asset.
Right. So that's really, a lot of people like that, to leverage and get more Bitcoin. But more importantly, a lot of them do that to not sell their Bitcoin and still spend some money.
So I want to buy a car that might cost $50,000. I could borrow against my Bitcoin, but not sell the Bitcoin.
Correct.
So over the 5-year loan, so to speak, the theory is the asset of Bitcoin will be going up.
Yep.
And I can be paying it back.
Correct.
That way.
Yeah. You don't even have to pay it back. So a lot of the
Explain
Bitcoin,
that to me.
Well, so a lot of the Bitcoin, let me say it more rigorously. You don't have to make payments. You always have to pay the loan back, right? But a lot of the Bitcoin loans, they're no recourse loans. You're not even guaranteeing the loan. You put let's just make it simple. You put one Bitcoin in, and you can borrow. Let's just say Bitcoin's at 100,000, and you can borrow 50,000. And then if Bitcoin falls to like below 70, you start to get into that margin call kind of thing where they could take your Bitcoin. So that's what you have to worry about. So a lot of people might put 2 Bitcoin in to borrow 50,000.
Super secure.
Super secure. You can see it on chain. You can actually see where your 2 Bitcoin is, and with certain types of lenders. You don't have to make payments. And as long as, so if you borrow 100,000,
I don't make payments. So explain that. Why am I not making any? So in 5 years, do I still owe the exact amount that I owed the day?
No, you owe the money based on the interest rate. Let's just say the interest rate's 10%. Okay, so you buy $50,000. You borrow $50,000 of Bitcoin, and then after year 1, you owe 55. But if Bitcoin was at 100 and now it's at 120, you're still okay. They just keep, as long as you don't get to that whatever their cutoff is, their margin call area, you're fine. So as long as the appreciation of Bitcoin exceeds the interest rate, you don't have to make a payment.
And I think I'm
not saying that's not dangerous, by the way.
Well, so is borrowing money to buy a home, for the record. But I think the difference is the reason real estate as a class is huge. It's the one of the biggest that there is, right? It's huge. I think it's the second largest class of all. So it's huge. But I think it's because most of us can wrap our head around that long term, that's a store of value.
Correct.
You can't argue with me that buying a piece of Manhattan doesn't make sense for 100 years from now.
Yep.
You can't, like, it doesn't, it's really hard to argue that.
Yep.
And I think once people all can agree fundamentally on that, that's going to be it'll be like a gold rush scenario. And I think it'll never go backwards. And that's why I think I'm pretty much at an inflection point that if you don't understand it, you need to get an education on this, because I think you're in an opportunity to change the legacy, honestly, for yourself and your potential family, if you understand what we're talking about right now.
Well, so let's talk about the macro side a little bit. So if you kind of, this takes some serious thinking, because we're all like swimming in the water we can't see, right? Like, or we breathe in the air, right? So everything in a normal free capitalism society, things should be cheaper every year, because technology makes things cheaper.
Right.
But things become more expensive every year. But they become more expensive because we debase the dollar by printing more dollars. So it's counterintuitive. We expect inflation every year. It'll be 2% or 3%, or God help us, 8 or 9 or 10 or 30%, right? We expect it, but inflation is not normal. In a pure capitalism, right, there is not inflation like that. It's deflation. Okay. So now, if you understand that we have $37 trillion of debt, we've passed the tipping point. If you talk to anybody, nobody thinks we can get out of that situation. The only way you get out of that situation is to monetize the debt. What does that mean? Which is what Trump is doing, is he's creating inflation so that the government's borrowing money at $37 trillion, and yes, they'll pay back $37 trillion, but they'll only be worth $15 trillion when they pay it back, or $10 trillion or $5 trillion. So
that your growth is outpacing your debt, essentially.
No. So the inflation outpaces the debt, right? Like, inflation goes so, like, if I borrow $100 from you today and I have to pay you $100 back in 20 years, that $100 is only going to be worth like $8. Or not $8. I'm sorry, I was thinking 10. Like, pick a number: $70, $60, $50. We've proven inflation just eats away. So what they're going to do is they're going to monetize the debt through inflation. Okay, as a way of kind of getting through the situation. Well, that means your dollars are going to be worth less and less every year. So how do you protect yourself against that? That's where Bitcoin being fixed at 21 million is the hedge against that. So there's a lot of reasons to own Bitcoin. We can talk about self-storage and the government seizing your money, and a lot of that stuff is on the fringe, maybe for not some people, but people are really getting the 21 million. That's why Bitcoin right today is at 114 and not at 60, because Wall Street and institutions are starting to wake up and say, if I own Bitcoin, that becomes a hedge against the debasement of the US dollar.
But what about these big actors that have all this money, the Wall Street? They come in and say, they're not like me trying to get a couple Bitcoin. They're going to get billions and billions. Isn't there a time where enough people are holding it and not enough people are selling it?
Yeah, that's when you get, and what happens? Simple as
supply and demand.
Yeah, so price goes up.
So there will come a day where someone says, I'd like to put a $10 billion order in, please. And they go, I don't have it to give it to you.
Well, they will, because the price will go up until somebody sells.
Because there's somebody out there that goes, that price is so high, I'm ready to buy my beach house or do something.
Yeah, because people have lives to live, right? You could say the most important thing that you have in your life is time. The second most important thing is Bitcoin. Okay, so at some point
that'll be the caption. Yeah.
At some point you sell your Bitcoin to buy you time or to enjoy your life.
Right.
And everybody's like, Michael Saylor owns now almost 700,000 Bitcoin.
Right.
He's been buying every week. Everybody's like, who's selling? Who's selling? Well, a lot of the OGs are selling from 15 years ago because they want to enjoy life.
Yeah.
And they want to buy the house and take care of their kids and put their kids through college, and all that costs money.
Yeah. That's crazy. And then the last thing, because I could honestly talk for hours and I don't want to kill you doing this.
No,
but
I've got all the time in the world.
One of the things I wanted to ask you is that, like, when I personally was doing this, I'm trying to figure out if I had a big position, let's say it does go up into the millions one day, and it percentage-wise becomes larger.
You mean when it goes into the millions?
Okay, sure. Okay. I'll change my my tone here. But when it gets to this number, it becomes a larger and larger percent of majority of folks' net worth at some point. If you were early enough into the system, it goes from 3% potentially of your net worth. It might go to 30%, and it might be 70% one day if all you own is most people, if they're not even most people aren't in this situation, but you own a house and you have a car and a few other assets. So the net worth, for example, of the average American is right around $400,000. And it's right around the average cost of a home in the country.
Really
That's a good metric.
Interesting, yeah.
And the average net worth of a renter, by the way, is like $10,000. So currently the biggest differential in this country to learn about your net worth is whether you own a home or not.
Right.
And when you bought the home. The earlier you get into real estate, the earlier or the more likely it is for you to have worth. That's why they call it your piggy bank.
Right.
So that's why this whole subject is so interesting. And those numbers could be slightly off, but you get the point. So how do you protect it? So if you have these this cold storage, you're not maybe putting it on your knuckles. I don't see it on you like my friend. But let's just say you have it. You can get these devices. You can put them at home. How do I not get broken into and stolen? Or if I die, for example, my wife could care less about Bitcoin. She doesn't even. We talk about this at dinner, and she just falls asleep. So I want to protect her and my family. So what are there ways to do this at this point?
I think so first of all, cold storage is like the Rolls Royce of Bitcoin storage, but it's not for everyone. Because with sovereign money comes sovereign security. Not only do you have to worry about how you're going to store it, and I'll answer your question in a minute, but you also have to worry about inheritance. Like how are your heirs going to get that?
That's what I'm concerned about.
You have to worry about somebody coming to your home with a gun, right? So there's ways. I'm going to say there's ways to protect yourself against that. Right. Okay, you can use multi-signature wallets, for example, where you might have 5 keys and 3 of them have to sign, but not all 3 are in the same spot. So you have to drive or fly to another spot to be able to move your Bitcoin. You could custody it. There are custodians out there, not Coinbase, that actually keep your Bitcoin but hold it with a true custodian. Okay, that's a third-party company that's designed to hold Bitcoin.
Sure.
That's, it's not perfect, but that's a good in between. I tell people, most of my friends that I've, orange pilled is what this is called, right? Going back to the Matrix with the red pill, the blue pill, this is the orange pill, right? They start with either buying Bitcoin and holding it with a custodian and paying a small fee for that, or they buy the ETF. And then as they get more and more into it, they start to learn they start to switch over to more sophisticated storage. But you have to, I had a friend who was going to, I was going to teach him how to do the self-storage. He bought the $200 worth of stuff he needed. We went to this, we were at a hotel, and I said, well, I'll come over to your room and I'll help you set it up. He said, well, let's go down and have a beer and do it then. I go, we can't do that. He's like, what do you mean? I said, well, there's cameras everywhere. If somebody sees your 24 words, which is like your password, then your Bitcoin's gone. Yeah. He goes, don't worry about that. I said, you know what? You're not ready for self-storage. Right. You're not ready. You're not willing to put the work in to keep it. So there's lots of ways to do it. You can buy insurance against your Bitcoin. You can keep it. There's institutional custody solutions where you can have 3 different companies have a key, and 2 of the 3 have to sign to move the Bitcoin. They're located in 3 different countries. And
I've heard there's a whole business booming where if you're a corporation and you have $1 billion to invest in your corporate treasury, you don't want to have the CEO have the keys because that puts a tremendous risk on their life, right? So you need to have.
So Coinbase, most of the big companies use Coinbase.
Okay.
Not Coinbase like you and I would use it, but they're professional custody solutions. And obviously,
and it requires multiple people signing off, so no one can hold a gun to your head and say, "Give me all the Bitcoin your corporation has."
The point of Bitcoin self-storage is to eliminate single points of failure.
Right.
If somebody puts a gun to your head, or if I die, or if my wife and I die together in the same car crash, or your exchange goes under. You want to eliminate single points of failure. Right. That's the whole idea. But I don't want to scare people about the self-custody because it is work. But you don't have to start there. You can actually buy the ETF. You can buy Bitcoin through Swan, for example, and get real Bitcoin that's held in a by a custodian, not by Swan, by a third-party company, and start building your Bitcoin that way. Then once you get enough, do you need a self-custody Bitcoin? If you have $1 million net worth and you have $20,000 in Bitcoin, you probably don't need a self-custody.
Right.
Okay, but when that 20,000 turns into 250,000, you probably do.
Right.
So there's a progression. So the point is get off of zero.
Right.
If I can leave you with anything, is the only wrong answer is zero.
Well, it's fascinating to me, and I hope this opens up a few eyes. And I think because we very quickly get, I think, very deep down the rabbit hole. I think we did today as well, because it's hard not to. And to me, when I started doing this, I would have to stop or pause something and just research a word or a term because I didn't understand it.
Yep.
And I think it stops so many people, even my own family. I'm the only one in my entire family that's even considering this. And that's why I know it's still early. So I've heard some people that are starting to learn about it and say, well, if it's too late, people like you have been doing this and now their net worth is in the tens of millions and I'm screwed.
So let me say,
they can't do it.
There's an old saying in Bitcoin is everybody gets Bitcoin at the price they deserve.
That makes sense.
I didn't deserve it at $3,000 when I saw it there on the CNBC ticker.
Yeah.
I deserved it at 33.
Yeah.
as an average, right?
Right.
I have friends I have a friend of mine who has the same amount of Bitcoin that I have. And his average cost was $4,000.
Wow.
I have another friend that sold 1,000 Bitcoin to buy a car.
Yeah.
Buy a car. Back when it was $70 a Bitcoin.
Yeah.
A $70,000 car, right? So everybody gets it at the price they deserve. And one of the neat things is Bitcoin is so less risky now. Now maybe it's not going to 100x or 1,000x from here, like it did when it went from 1,000 to 100,000. But it's also so much safer. The government has embraced it. They've approved the ETFs. All the banks are.
The next administration can't come in and just reverse all of this?
That would be, they could reverse some of the things, but how can you, if the ETFs own $170 billion of Bitcoin, how can you
money talks in this government. So
yeah. So how do you undo that? They could make it hard. I think the thing that concerns Bitcoiners is the rails. Okay, is that the government could come in and say you can't self-custody. You can own Bitcoin, but it has to be.
How do they tax us though?
Well, it's capital gains tax. So when you sell,
But if it's self-custodied and I want to exchange goods, let's say you're a roofing contractor and I need a new roof one day, right? If I want to exchange this and you have a Bitcoin, is that possible? And can they track it? So will they know that was income I gave to you?
So you would have to, because
the government will care if there's tax evasion. Boy, they come after you.
Well, that's the point, right? So for sure, you have to pay tax. If you pay $5,000 for the roof to the roofing guy in Bitcoin, you are actually selling your Bitcoin, and you have to pay capital gains tax on it. Now, is that tracked? I don't know, but remember when I
think the risk is if it's not tracked and it starts to become mainstream, they're going to have to find a way to make sure that they track it.
What's hard, it's right now it's de minimis, right? Because it's hard to, one of the things that prevents adoption of Bitcoin in terms of a medium of exchange, which means I pay for your services and I get paid with Bitcoin, is that it's a taxable event. So by the fact that it's a taxable event means 90% of the population is not going to engage in it. So Bitcoin becomes a store of value, hopefully soon to replace gold.
Okay. So the dollar still might have a role, even though it's just you're not going to have the main store value in that currency.
Correct. I actually think that so you have store of value, you have medium of exchange, and then you have a unit of account. Those are like the three levels of money. Okay, so Bitcoin's a store of value now, and when it gets to 1 million is when almost exactly when it'll match gold in terms of market cap, about 20 trillion.
Right.
Okay. Then unit of account is when it takes over like the pricing of everything. I don't actually think that we'll ever give up the US dollar unless the country collapses at some point. But what'll happen is everything will be priced in Bitcoin in some future time, 30, 40, 50 years from now. You say, okay, that's 1 Bitcoin, and then that car is 1 Bitcoin, and then to buy the car, you might, okay, well, 1 Bitcoin today is $115,000, so here's $115,000, but it's priced in Bitcoin because it's the only thing that doesn't change. So that way, so you could say this car is 1 Bitcoin, then tomorrow that car might be 0.85 Bitcoin because of the technological advances. Make that car cheaper. But what it actually is in dollars could go up and down depending on the debasement of the US dollar. Does that make sense?
Kind of. I mean, I think we've lost everybody who wasn't lost before, but that was the goal here. If we didn't lose most people, if you're on this now, they're 4 whiskeys deep and really just on the ground rolling around, not knowing what's going on.
Get off of zero. How just keep it simple.
That's all I have to say. But hopefully this is really to me. I want to join here selfishly because I think this is part of my journey of understanding what this is. And I think, I am in a position now where I need to start accumulating. I think I like the dollar cost average. Sometimes you have that FOMO. I want to catch up, right? And so you don't just go in and say whatever you possibly can grab, you immediately put it in immediately. But there is a chance because there are experts that are truly experts.
I think like for somebody like you, knowing a little bit about you, putting X amount of money into Bitcoin today is a smart thing. And then get a chunk.
Yeah, get a chunk.
And then dollar cost average going forward.
Yeah.
So you're not just starting from zero with the dollar cost average. I think that's a legit way.
Yeah, I mean, just to me, I like the idea of cash flowing assets. This is not a cash flowing asset to me. And so that's why I like the idea of owning the underlying asset of real estate that has a cash flow associated with it that can pay down my debt. I have a fixed mortgage on it. And then I can buy my Bitcoin. That's really how I intend to buy this because I can borrow, let's say, $115,000 off of one of my properties. And it's considered a loan. It's a mortgage. I don't have to pay taxes on it because it's a mortgage, right? And so that income, it's not income, right? So I can borrow against it. Exactly. I can then buy a Bitcoin. Yep. And then my little LLC that has that particular property is now, in essence, a Bitcoin holding company.
So the one thing I'll say about I love cash flowing companies. That's one reason I like the Bitcoin mining. I get both. I get a cash flowing company that also produces Bitcoin, right? But, Bitcoin consistently goes up, not always, but consistently.
And the number I keep hearing, correct me and once again, this is not financial advice. I never talk about money this much, so I got to keep saying that or else the algorithm is going to, Lord knows what it'll do to me. But on average, what I hear is 30%. It's no longer going up 100%. Like these big, massive gains annually are coming to an end is what I understand. And on average, and it depends on who you listen to, but between 20 and 30% annually is considered pretty realistic.
I would. That's what I budget. I'm not going to guarantee that, obviously. And that's what most people are in that 20-35% range for the next 5 to 8 years. At some point, it'll start really growing slower. It'll get down to and at some point, it'll probably just match the debasement of the dollar. If they print 5% more dollars, it'll only go up 5%. But that could be 30 years from now, 50 years from now.
Right.
But the one thing I will just say is that Bitcoin is 100% liquid. You can sell it anytime, right? Unlike your real estate, without any transaction cost. The transaction costs of selling Bitcoin are nothing compared to real estate. And it's not a cash flowing business, but it also doesn't take any work. Yep. And obviously
you say there's no tenants because you have enough Bitcoin, it's enough money where you're like, if I transfer that all to real estate and you said, Matt, buy me 30 of these rentals, now you have 30 tenants. Now you have, each house has 3 toilets and three a furnace.
And you can hire a management company, but it's still work, and you're paying for that. So there are pluses and minuses to each asset class, and I like them both. I like real estate.
That's why I love the idea, at least for me, in my simple mind, I like combining them. Because the one thing I'm exceptionally talented, like I know I have, it's an unfair advantage at this point. That's why I've been so focused on real estate. That's why I like the idea of trying to combine them.
Yeah.
In my own, that's how I'm getting to this.
If you can borrow money at 7% through your real estate to buy Bitcoin, that's a no-brainer.
And I just think the odds of Bitcoin long-term, short-term it could go down by a lot. That's possible. But I think long-term, this is how you're in my head, this is how I'm thinking. Long-term, it's very likely to be going up at a higher rate than what I'm borrowing it against.
Correct.
And if it's cash flowing enough to offset my borrowing cost, it's a no-brainer to me.
Yes.
That's that to me, but you have to be in a position. So if I said, what's chicken or the egg? If I don't have either, and I'm looking at, I just have enough to do something. Do I buy my first investment property, or do you instead buy your first Bitcoin?
I don't know the answer to that, but I'll say the only wrong answer is 0.
Yeah. There we go. Well, listen, we have to have something to talk about in the future, so we can't give all the answers away.
We can have a whole Bitcoin mining episode.
Yes, and I will get you back for the mining because we did not even discuss that in depth, and I do not want to make this a 13-hour podcast, even though I find it fascinating. So I really appreciate you. Is there anything else that you think we haven't mentioned or I should mention, at least on this first discussion with you?
So, when I kind of lead webinars on Bitcoin, I say Bitcoin is censure resistant, decentralized, rules-based, hard money. And I kind of just take the whole hour and explain that one sentence.
Yeah.
We've kind of touched on all of that, right? It's decentralized. There's no head of it, no way to shut it down. It's censure resistant. If you hold your own Bitcoin, the government can't take it from you. They could throw you in jail in theory, but they can't take your Bitcoin from you. It's rules-based. Bitcoin is nothing more than open source software. So it follows rules. Everybody knows what the rules are. Unlike fiat, where there's a person in charge, they change the rules, they create the price of money. Kind of makes no sense when you think of it.
Yeah.
Okay. And it's hard money. It's backed by energy, by 0.5% of the world's energy. So you can't just go in and you can go in and mine Bitcoin, but it's going to cost you a lot of money. You're going to pay a lot of utility bills. So it's backed just like gold is backed by how hard it is to get gold. Oil, the same thing.
Right.
You have to dig and get the oil, and that takes work. So it's proof of work. You only get the Bitcoin when you can prove the work.
Well, and I want to just add a point here that you glossed over. I think we've mentioned it during the meat and potatoes of this podcast, but when you talk about sovereignty and the government can't take it, to me, immediately I just think of crazy people that, are having pitchforks and like, stock all their food in the basement. And, it's just so, but I think we have the privilege of being in America where you have the right to be kind of in the dark, where you don't feel as afraid of your government, even though everyone should be at least cautious of what we see. But what I'm saying is we kind of can live in the clouds a little bit more. And there's plenty, like the example that Michael Sawyer would say is that if you're a wealthy individual in Zimbabwe, or if you have money in any of these other countries, and Raul here is in Mexico, there's plenty of countries that are even more over the top in terms of they're egregious in terms of their money printing. They're even more corruption than what we're exposed to here.
Or they're unstable.
They're unstable. What do you do? And it's like
now for the first time in the history of human civilization, you can cross a border, you can memorize the 24 words, and you can actually take your wealth with you.
Yeah.
Versus just the clothes on your back.
It's
if you take a gold bar or cash across a border, it's going to get stolen or confiscated.
Yep.
In a third world country, right?
Right.
So it's transformational. We haven't even gone into the transformational nature of Bitcoin for third world countries and what that can do to empower people.
It's wild, and you don't have to be wealthy, but you could just be a farmer in one of these countries and say, I don't have to be dependent on my nation state to control everything about me. I'm going to put whatever I can away into this class, and in 10 years, I'm still going to have something that I can't be.
Yep. I mean, it's not going from $1 to 100,000 anymore, right? But it's also not risky. So there's no doubt that Bitcoin's going to hit 10 million, 20 million, 30 million over the next 20, 30 years. And we're still so early. There's $900 trillion of assets in the world. So Bitcoin will at some point consume them all, probably sometime after my lifetime.
Yeah, that's wild. Well, very nice. Well, thank you, Neil, for joining me today. Hopefully, if you hung in here and listened to this, hopefully you were able to get some bits out of this. And thank you. I will have you back at some point, because I think this will be more interesting to even revisit this myself in 6 months or a year.
Sure.
During my own experience, right? Through your own journey, and to understand and to become more knowledgeable. And so I look forward to that. And thanks again.
Thank you. Thank you for having me.
All right. Cheers.